Victoria, this is a massive day for markets because of the wild ride we've seen. Is it the possibility that this jobs number could really send the bulls or bears to their respective corners?
Dom, I think absolutely. I mean, this is a number it's a big number every month. I think especially this month, now that we've had these weakening numbers earlier with the ISM, both manufacturing and services, people are really looking at this to see, is the consumer still this foundation of the economy that we've been talking about all year? Are they going to stay strong? Are average hourly earnings going to be good? So there's a lot riding on this one number, and I think the markets could be set up for quite a bit of volatility if we get a significant deviation from expectations either one way or the other.
So, I mean, we often, joke, perhaps tongue-in-cheek, about how this current jobs report is the most important jobs report since the last jobs report. But in this case here, this really is about scales, right? This is about this idea that we are seeing signs of a slowdown, signs of a possible recession, and then other economic data that still supports a growing, albeit slowing growing, economy in the United States. So what exactly will be the key in this jobs report for you about whether or not those scales get tipped one way or the other?
Yeah, I don't think it's the actual number itself. I mean, we know that the number of jobs created is going to come down. We can't keep generating 200,000 jobs each month like we did at the beginning of the year. So I think people are expecting something in that 130 to 140 range. Average hourly earnings, I think, are going to be key, and hours worked are going to be key because that's where the consumer gets its strength from. So people will be watching that. And Dom, when we look at kind of a list of recession indicators, I mean, the labor market is one of those that has the most positive strength. And people look at that to say, no, we're not going into a recession because the consumer and the labor market is really strong, along with credit markets. So this is going to be one of those telltale signs. If this starts to turn a little bit negative, then your recession indicators start to tilt a little bit towards the downside.
Victoria, are there companies, stocks that you are looking specifically at because of this kind of environment?
Well, we always try to find names, not particularly sectors in general, but names that have taken a hit that we can maybe go into a little bit. The last new name that we actually added was in the housing sector. That was Lennar. We added that back at the end of August, which was a really good time to do that. The name has done really well since then. But look at housing. I mean, that's another recession indicator. Housing has really had a turnaround. It hit cycle highs back in August when we look at housing starts and building permits. So that's a good place we think to be right now, especially for builders on that lower price range. But we're also adding to staple names. Like we added to Coca-Cola, we added to Apple over the last week or so. So find your niche where you think there's some opportunities.
All right, opportunities abounding in this market. Victoria Fernandez live in Houston this morning. Thank you very much.